So, you've probably heard the buzz about Pakistan's financial markets. They're showing some really incredible signs of growth right now. But the big question is, how does an everyday person like you or me actually get involved? Well, that's what we're going to break down today. We'll look at the key numbers, the simple ways to invest, and exactly how you can get started step by step.
Let's just kick things off with a number that tells a huge story. 2.41 trillion rupees. Now, what is that? That's the total amount of money invested in Pakistan's mutual funds as of March 2024. And get this, it's a 57% jump in just 1 year. That's not just growth. That's a massive signal that investors, both at home and abroad, are really starting to pay attention.
Okay, now for the number that looks to the future. 208,000. That's the target some analysts have put on Pakistan's main stock index, the KSC 100, for the end of 2026. This isn't just a small hop. We're talking about a projection for some serious upward momentum, and understanding why is exactly what we're here to do. Seeing big numbers is one thing, right? But what's actually fueling them? These figures point to a pretty significant investment opportunity. So let's pop the hood and look at the engine that's powering this whole wave of growth. This momentum isn't just some flash in the pan. As this chart shows, the market has delivered some absolutely stunning returns lately. We're talking 55% in 2023 and an unbelievable 84% in 2024. But now, the forecast is shifting away from that kind of explosive phase to something a bit more stable and sustainable. So, what's the secret sauce behind this positive outlook? Well, it's really a mix of a few key things. First, you've got strong local investment, which creates a really stable foundation. Second, the country's foreign exchange reserves are getting stronger, which is great for economic stability. Then, there's actual real progress on big projects like privatizing state-owned companies like the national airline, PIA. And finally, there's a serious push to fix the energy sector's circular debt, which is basically this huge, complicated debt problem that's been holding the economy back. You put all that together and you get a much healthier environment for growth. Okay, so that's the big picture economic stuff. But the question on everyone's mind is, how do you tap into this? Well, for most people, the simplest, most direct answer is mutual funds. Just think of them as the front door to the market. And if you're not familiar, a mutual fund is actually a pretty simple idea. It's just a giant pool of money collected from thousands of investors, just like you. A professional fund manager takes that pool and invests it across a whole range of different assets. This gives you two massive advantages right out of the gate. You're instantly diversified and you've got an expert managing your money. And you really don't need to be a financial whiz to get in on this. There's this myth that investing is only for experts, but as Mawazna.com points out here, mutual funds are literally designed from the ground up to be accessible for everybody. A huge part of this accessibility is this really smart government innovation. The Securities and Exchange Commission of Pakistan, the SECP, introduced something called Sahulat Sarmayakari accounts, which literally translates to easy investment. And believe me, they live up to the name. Now, anyone can open up an investment account with just a simple one-page form. That just tears down one of the biggest barriers that used to keep new investors out. So, getting started is easier than it's ever been. But once you're ready to jump in, you'll face a really fundamental choice. And in Pakistan, this choice often goes beyond just the numbers on a spreadsheet. For a lot of people, it's a matter of principle. Are you going to go with conventional or Islamic investing? And understanding the difference is key. With a conventional bond, you're essentially just lending money to a company or government, and in return, you get fixed interest payments. It's a debt. But with an Islamic bond, which is called a sukuk, you're not lending money. You're actually buying a small piece of ownership in a real tangible asset. So your returns aren't interest. They're a share of the profit that asset generates. It's the difference between being a lender and being a part owner. And that whole philosophy goes even deeper. Sharia-compliant investing means your money can only go into real assets, and it explicitly avoids certain industries that are considered prohibited. So it adds this whole ethical and faith-based layer to the investment process, which for many people is a really important distinction. Okay, we've looked at the market opportunity, we've looked at the tools you can use, but none of that really matters until we connect it to the most important person in this equation, you. It's time to figure out your own investor profile, your financial DNA, so to speak. And the first, most critical question you have to ask yourself is this one right here. What is my time horizon? Seriously, are you saving for a down payment next year, for a kid's education in 5 years, or for your retirement decades from now? Your answer to this one question is the key that unlocks your entire strategy. And check this out. This table, which is based on guidance from Pakistan's Mutual Funds Association, is a fantastic roadmap. If you need your money in less than a year, you'd look at very low-risk money market funds. These are super safe, almost like cash. For a medium-term goal, say 1 to 5 years out, you might consider income or balanced funds, which have a mix of safer bonds and some stocks. But if you're in it for the long haul, 5 years or more, then you can take on more risk for potentially much higher rewards with equity funds, which are mostly invested in the stock market.
All right, you've analyzed the opportunity, you've figured out your personal profile. So what's the last step? How do you actually make it happen? Who do you call to start this journey?
Well, your first point of contact is going to be an asset management company, or an AMC. These are the officially regulated firms that create and manage all the mutual funds. And you have plenty of great choices, from government-backed giants like NBP Fund Management to firms like Al Mizan, which is actually the country's biggest specialist in Sharia-compliant funds.
And this next point is absolutely critical. Every single one of these companies is regulated by the SECP. That oversight provides a vital layer of protection for you, the investor. It means you're not just navigating this market all on your own. There's a strong regulatory framework in place that's designed to keep your investments safe.
So let's just bring it all home. We've seen a market that's packed with potential. We've seen tools that make investing simpler than it has ever been. And we've walked through a clear roadmap to find the right strategy that fits you. So the only question left is the one for you. What's holding you back from starting to build your financial future?